Think about it for a second. How often do you really feel like you're in control? You put your money into startups, hoping for growth, hoping for the big win, and yet, somehow, you're just along for the ride. You get reports, emails, updates that are too full of jargon and too little of real insight. And when the big decisions happen, you're mostly just watching from the sidelines. It's a frustrating place to be. The one who's given the fuel, but not the steering wheel. Now imagine flipping that script. What if, instead of watching your investment being managed without your real say, you could actually hold a piece of the startup itself? Real equity, real power, beyond just being a silent partner. Picture this. The very people who bring the money also get a seat at the table where the future is shaped. Not just in name, but in undeniable concrete ownership. This is not just a fantasy. There's a growing rumble under the surface, a shift so huge that staying on the sidelines might soon mean being left behind entirely. The question isn't whether this will happen. It's how fast and how ready are you to claim your seat in this new reality. Right now, there's a tension, almost a quiet revolt, brewing among limited partners everywhere. Tired of the often one-sided dynamics where founders hold all the power, where your influence for all your capital is limited to just hoping and praying that the company does well. It's like being locked out of your own investment, a source of ongoing pain that's invisible to many. How many times have you sat through meetings wondering, why am I just here? Why can't I be more than just a number or a line on a term sheet? But this dissatisfaction isn't weakness. It's raw potential, an untapped force screaming to be unleashed. LPs are beginning to see that holding pure capital without real skin in the game, the real stake in ownership, means losing the ability to shape outcomes, to protect themselves, and to truly benefit from the startups they fund. Here's where it gets powerful. Demand equity. Not some vague promise, but actual shares. Stakes that give you a voice, a vote, and the ability to influence not only financial outcomes, but strategic decisions. This kind of move isn't just smart, it's transformative. It flips the power structure and creates new tensions that, when balanced right, can birth truly unstoppable companies. But this path isn't for the faint-hearted. Bringing equity into the mix means diving into complexity. It means challenging old norms, pushing back against founders who want all control and want you just to trust without real say. It means sometimes having to fight for your seat, for a fair deal, for transparency that's deeper than surface-level reporting. Yet this is exactly where the future lies. Because startups aren't just bets on the next app or the next platform, they are ecosystems. And when LPs jointly own a part of that ecosystem, the entire game changes. Suddenly, funding isn't just money. It's partnership. It's shared ambition. It's a combined vision where everyone's future is tied not by contracts alone, but by genuine shared ownership. Imagine the edge that gives you a chance to be more than a passive investor, to be critical, to ask the hard questions, to demand change when things go off course, to protect your capital not just with legalese, but with real influence, to be someone who isn't just along for the ride, but someone who makes the journey. And this isn't just theory. Early experiments are already showing how this level of involvement can create stronger, more resilient startups. When founders and LPs both have skin in the game, when LPs can influence tough decisions, companies grow with a sharper focus, faster iteration, and a deeper resilience against market swings. It's a far cry from the old model where LP influence ended at the check signature. But for the LPs ready to embrace this means leveling up. It demands more than money. It demands knowledge, patience, and a willingness to step into uncomfortable spaces. You need to study term sheets like a hawk, understand the value of voting rights, and insist on transparency that goes beyond quarterly updates. You have to be ready to hold founders accountable while also building trust where it counts. Because here's the harsh truth. Without this shift toward real equity participation, LPs will continue to lose out on true upside. Will continue to be sidelined in the strategic decisions that make or break value. The power imbalance isn't just unfair, it's costly. It filters down into smaller returns, missed opportunities, and frustration that eats away at what should be a thrilling process. So, why does this matter more now than ever? The investment landscape is shifting faster than it did a decade ago. Startups are more complex, the ecosystem more crowded, and traditional models strained under pressure. New players are entering with bold ideas, and those who cling to old ways risk fading out. Demanding equity gives LPs the tools to not only survive but to define the next generation of venture investing, to be active participants, not just silent spectators, to form alliances that are stronger, smarter, and more aligned. You might say, but isn't this too risky? Too much hassle? But ask yourself, isn't staying passive in the current system even riskier? Isn't it riskier to accept a diminished role when everything else is evolving around you? To watch while others gain bigger pieces of the pie, while you stay stuck with crumbs? This isn't about greed. It's about rightful claim, about fairness, about demanding the respect that should come with the capital you place on the line. It's about unlocking doors that have long been barred and stepping into the arena as a full participant. And here's the best part. This movement is already gaining momentum. LPs who have taken this leap are not just seeing better returns. They're part of shaping companies in ways that create lasting impact. They're building relationships with founders that go beyond dollars, collaborations that redefine how business is done. No more spectators, no more whispers of discontent while decisions fly by. This is the dawn of a new role for LPs, one where your voice echoes, where your capital truly counts for more than just money. So start thinking. What would it mean for you to have equity in the startups you invest in? To transform from silent benefactor to true partner? To claim the power, the responsibility, and the potential that comes with real ownership? This isn't a question for tomorrow. It's a call for right now. The path won't be easy. It will demand grit. It will test your patience. But those who step forward will build something greater than just returns. They'll build a new way to invest, a new way to grow, a new way to win. This is your chance to break out of the old roles, to demand what's fair, to seize control of your future. Don't wait for the world to hand it to you. Make your claim. Insist on equity. Join the few who refuse to accept the status quo and who step into real power. Because in the end, your capital deserves more than just numbers on a spreadsheet. It deserves the chance to shape the future itself. The future is moving. The question is, are you moving with it, or are you being left behind?